Hello guys, in today's video I'm gonna be talking about low resistance liquidity run and how to anticipate the low resistance liquidity run for New York session, specifically for the morning session. Now, the way I anticipate a New York low resistance liquidity run is by looking at the overnight session. So in this case, let's take a look at this price action here. So here we have an Asia range and then London price action. It runs for the buy side liquidity. And then this fair value gap fails, and after all, it breaks down lower, breaks the structure, right? You can put it here, or let's just use this point here. So it breaks the structure. Let's put a structure shift. And then it keeps breaking lower and lower and lower. Now, before New York open, it leaves a fair value gap, an imbalance here, a SIBI. And it does not leave a local high or a local bottom before getting into this imbalance here. Now, this is the important point. Because it doesn't leave a swing high before New York open, you can anticipate a Judah swing at New York open into this fair value gap like this, and this is 930 candle, 945 candle, and then it breaks down in a fast manner and targets the sell side liquidity. This low, and we have this low right there and right here. So it runs the liquidity with low resistance. Now let's skip to another example. Same thing here. We are looking at the overnight session. Asia range. Then London kicks in. Right here it runs the buy side. This is 8 a.m. candle. Then it breaks the low, shifts the structure with this, and leaves an imbalance before New York opens. And the market does not print a swing high before New York market open. So when it opens, as a Judah swing, it trades into that that imbalance, and then breaks lower, targets the liquidity, the sell side liquidity in a fast manner, very quickly, very high paced. Like 1, 2, 3, 4 candles, for 3 consecutive red candles, and engages with the liquidity pool it wants to reach into. So when you see a liquidity run during overnight session or before New York open, and it leaves that area, that liquidity in a fast manner, forms a fair value gap. It can be tested, like you see here, it was tested. But the key here is it never printed a local high, a swing high, within this fair value gap or outside of this fair value gap before New York opens. So what I'm trying to say here is, let's say we have this buy side, then we accumulate here, right, Asia range, then London takes this high, buy side, breaks the structure with a fair value gap here. Now, before New York open, if the market prints a local high there and then runs into a fair value gap, in this case, I would not be able to anticipate a low resistance liquidity run. In fact, I would expect a choppy, sloppy morning session, and I would be rather looking at the afternoon session just because the market printed a local high, a local swing high before New York market opens. And this is because when it opens, the Judas, the Judas swing, it engages with the buy side liquidity. And because of that, what the algorithm is going to do, more often than not, it's going to accumulate within this fair value gap before breaking lower. That's when we see high resistance liquidity runs. And usually people get low accounts during those high resistance liquidity runs. Now let's take a look at a bullish example. So let's go on a 1 hour chart here. Maybe I should switch to NQ continuous oh, never mind. I got one here. Wait, I lost it. Right there. Okay. So, I mean, I'm looking at the quarterly contracts here, but let me actually just switch to NQ rather, so you don't get to see these imbalances over there. NQ continuous contracts, 4 hour chart. It was 14th of August, I think. August 14, where are you? Right about there, got it. Now, in this case, in this bullish example, we have the Friday's price action, then Sunday, right about here, Asia range, overnight session. It engages with the sell side, right? Then it breaks the structure, changing the state of delivery or structure shift. And it shifts with displacement, with this imbalance here, right? Before New York opens. Let me mark out New York open, so you can also see it with me. This is 9 actually I'm on the 1 hour, never mind. So before New York opens, it does not print any local lows, swing lows, and it trades into this fair value gap here before New York opens. Now within this candle, New York opens, right? And energetically, it runs to this quote unquote low hanging fruit objective buy side right there. This is also 10 a.m. to 11 a.m. candle, which is the silver bullet, right? It runs it with just one hourly candle. Actually, 1.5 after New York opens, 1.5 hourly candle. So, the general rule to anticipate low resistance liquidity runs for New York session, I want to underline, I want to circle that. It's for New York session. It's not for London. It's not for New York PM session. It's just for the New York morning session. So overnight, you really look at the overnight session, right? This is the bearish example. We create we create a high, probably in the previous session, previous PM session, when price accumulates during Asia. Then London raids, engages with the high, breaks lower with a fair value gap. That's important. With a fair value gap somewhere here, and it never trades into this fair value gap before New York opens. Okay, that's very important. It shouldn't do that. And on top of that, it should not print local high before trading into this imbalance right here before New York Open. So let's say we are reaching there, right? And this is New York Open. New York opens, we trade into there, and then boom, it sells off right away, right? There's no swing high in this price action right there. If it was like something like this, then at New York Open we had to engage with this buy side here to get inside of this imbalance, this fair value gap. Then I would expect a high resistance liquidity run, and I would be more conservative, or I would just skip the morning session. Now on the bullish side, just draw it down here. So in the previous session, we traded into, let's say, a PD array. We created a swing low. Then Asia opens, accumulates, right? Goes back and forth, back and forth, back and forth. Then London engages with the sell side, and right after that, it breaks the structure to the upside with an imbalance. So that there, you gotta see a displacement there, right? So engages with the sell side. This is London, and then shifts the structure. Just write it down. Shift with a fair value gap. Now, before New York Open, you can expect a Judah swing. I'm sorry, at New York Open, you can expect a Judah swing into this fair value gap here, just to expand higher. In term, like as in a low resistance liquidity run. So, on the other hand, before market opens, let me just use this tool. Before market opens, if it was trying to trade into this fair value gap, it failed. Let's say it failed, and it created this swing low, right? This short-term sell side. Or let's just put SSL, short-term sell side. Now, because of this local swing low at New York Open, it is going to trade into this fair value gap again, but since it engages with the sell side now, a liquidity pool, a short-term liquidity pool rather, I would expect an accumulation, quote-unquote, a high resistance liquidity run in this case. So what it would do at New York Open, it will get down into this imbalance, then it starts chopping. Those are the days when you see seek and destroy market profiles. It goes back and forth, engages with both sides of the market a couple times just to expand higher afterwards, and takes out this buy side and maybe another buy side objective on the daily high time frame profile. So yeah, that's that, guys. This is how I literally anticipate a low resistance liquidity run for New York morning sessions. Thanks for tuning in, and I'll see you on the next video.